Our guest says bonds are pretty well his favorite investment right now. We are joined by John Zechner, chairman and founder of Zechner Associates. John, great to see you. Thanks very much for joining us.
Hey, Andy, it's a pretty boring intro line, isn't it?
You know, bonds, they tend to go down less than stocks. I know if interest rates or inflation surge, then you could be in trouble. But you think people should hold at least some bonds right now?
Well, I think it's a good hedge in the portfolio right now, Andy, because of all the things, the unknowns we have right now. The only thing I really feel comfortable in is we're going to see an economic slowdown. We've seen it in Canada already. I think the U.S., because of their fiscal spending, has been, held up longer than most. But, I think the consumer is cracking, because the stock market has rolled over the tariff risks and everything else. Their growth is heading down, and the rest of the world is still pretty meager. So I think that with inflation, tariffs aside for now, generally heading lower, I think we're going to see interest rates going lower, particularly at the longer end. So I looked at the U.S. long bond 460, 470 range, and to me that's a bit of a gift where inflation is, where I expect growth to be, and it's a nice hedge against the stock portfolio. We saw that in the first quarter. I mean, stocks went lower, and the bonds were a nice ballast to have in there, and you're generating some income at the same time. So it's not all in, but like I say, I think anybody who has a decent sized stock portfolio has to hedge it a little bit right now. And gold is a great hedge. I think bonds are a pretty good hedge right now too, Andy.
You think that Trump is being too ambitious if he thinks companies worldwide will relocate their factories to the US? However, you also think firms are putting investment plans on hold?
I think, yeah, in this environment, I mean, capital spending is done on the basis of a 10, 15-year plus outlook, and companies aren't comfortable what's going to be happening for the next couple of years, so they're not going to do these major capital expenditures. So there's some token moves maybe to, appease what Trump's looking for, and you've seen some of that already, but these major capital decisions are not going to happen to the degree that I think the U.S. administration is going to want them. So I think in that regard, they're going to fail on this. But, having said that, I think they're very serious about putting in the tariffs, and don't assume that this is just a negotiating tactic, because I think most importantly, they need the revenue from the tariffs to be able to offset some of what they're doing on the spending side, especially, extending the 2017 tax cuts, which, they've another one of the many promises they made in order to get elected. And in order to do that, how are you going to fund it? And they're looking at tariffs as one way to do it. But, the reciprocal tariffs, how it's going to play out, who has to pay it in the end is going to be inflationary. No matter how you look at it, if the customer pays a higher amount, the companies have to eat the difference, and that cuts into their profit margins. You're going to see it one way or another. And we all talk about Smoot-Hawley and it led to the Great Depression, but actually the game plan for this goes further back. You go back to the 1880s, and McKinley as president, which Trump has referred to many times, and they enacted they had no income taxes, and they used tariffs for all their income generation. But, what gets talked about less is that the U.S., for most of the McKinley administration, was in recession, and he ended up getting rid of the tariffs. So I don't think, it's a great strategy longer term. I don't think they'll achieve what they want, but in the short term, markets hate uncertainty, and we're seeing that reaction, today and I think going forward. And like I say, bonds, gold, things like that are good hedge, and stay safe. They say defensive stocks, high yield stocks, economically unsensitive stocks, that aren't hurt as much by the tariffs.
John, we're getting some numbers on Tesla here. Q1 deliveries missing estimates. They slid 13%. To just over 336,000 in the first quarter. The estimate was for almost 400,000. There's the stock down about 4%, but of course it's been on the slide this year. And apparently this sales drop brings them to the lowest since 2022. And Bloomberg says it comes amid anti-Musk backlash. So it looks like the CEO maybe should be just staying a little quieter in terms of his political pronouncements.
Well, and Tesla's problem is not only Elon Musk and his political affiliations and people, keying the Teslas and protesting against them. The bigger issue has been in place for much longer time. The migration to electric vehicles has been much slower than probably a lot of people expected or certainly wanted. And more importantly, the Chinese they own this market. Look what BYD has done in terms of, the battery life, the cost of the cars and everything else. Tesla has not got competitive products in that field. They got, I guess, more of the luxury end right now. But I think you really, in order to get the electric market going, you need a low-priced alternative in order to generate that demand. And that's just not there right now. And it's certainly not coming from Tesla. So I'm not at all surprised that, the stock's rolling over. The valuation hangs very much on what he's been able to sell to investors about, autonomous driving. And that's going to be, the be with all for this going forward. And that's the valuation of the stock. Yeah, maybe. I mean, if that's the case, I'd rather own, get Waymo through Alphabet or Uber or something like that and play it on more reasonable multiple basis. I think there's a lot more headwinds than strictly Elon Musk political affiliations right now.
You do have, you're not keen on Tesla, though, I think, right now, John. You wouldn't be a buyer of the shares?
I have not. We bought it briefly in 2022 when I think it dipped under 100, and then I quickly got nervous and sold it, left a lot of money on the table. But no, it's not. That valuation just doesn't work for me. In the end, these valuations do implode. We've seen it, and there continues to be areas of speculation. I just don't buy the valuation of Tesla, particularly as an electric vehicle company.
John, just very, very quickly, sorry about that. Air Canada is a stock that you like, or you have been buying lately. The share's out of favour, though. Give us your thoughts on Air Canada. Why do you see upside here?
In picking up the scraps, we raise a lot of cash in the portfolios. I'm looking for picking up things that have gotten oversold in the short term. And certainly there were a lot of tech names that I think have maybe done that, and they're still really well positioned. But Air Canada, it's got hit very hard, obviously, on less Canadian travel to the U.S., which is obvious, and people are extrapolating that. And airlines generally in tougher economic times, which we're certainly heading into, suffer more because of their high fixed cost base and all of that. So I can see what the negatives are, and you got that from UAL and Delta and American and all the other airlines that have reported or given guidance so far. But the only thing I say, relative to a lot of other industries, they can shift. And particularly this move to Canadians traveling less to the U.S. I mean, two couples, good friends of mine, recently always go to a Carolinas golf vacation this time of year, have both gone to the DR instead, Dominican Republic. I mean, Air Canada can shift their loads. They can shift them to Europe. They can shift them elsewhere. So I think the negativity is probably overdone. The cash generation is still strong. This is a well-run airline. So yeah, I'm looking at companies that have got really beaten up, where the stories have not, I think, mirrored the negatives on the stock. And we're using some of our cash to pick away at that, Andy. But I'm still defensive, still underweight stocks, and want to see how this plays out a little bit more in the short term.
John, as always, thank you very much indeed. John Zechner, Chairman.